Hi everybody, Jeff Rivett here, Portfolio Manager with Creed Capital Management Group and National Bank Financial. Hope that everyone's ready for a sunny weekend. I'm recording this on Friday, May the 10th, so looking forward to getting out and working on the tan. But for now, sitting in the office, working away the portfolios. Continues to be sort of more of the same and continues to be a really good year. Our balance model year to date, as of today, is up about 9 to 9.5% for most clients, which is great. It just keeps growing. You look at the average balance fund in Canada is sitting at about 5% year to date before any fees or anything like that. So the fact that we're sitting at sort of 9.5% net is extraordinary, and we owe that to sort of the same things I've been talking about for the last few months, but it's worth an update. Preferred shares continue to do extremely well. So fixed income in Canada, bonds year to date are negative, down about 2%. Preferred shares, of which we own about 10% of in our balance portfolio, are up about 10-12%. And in fact, we found out April 16th, royalbank.z, Royal Bank preferred share, that we bought sort of June last year, June 2023. We were buying it around $16-17. They have a par value or a redeemable value of 25, and Royal decided to do that. So overnight, it went from about $21, it had already come up quite a bit, to 25. So that's almost a 50% return in a year, which is pretty good for a fixed income bondy kind of type investment. And then on top of that, it paid a 5% dividend. So that certainly helped, and we hope that preferred shares continue to perform well. But nice to see that one's going to be called this month. Gold bullion again has done phenomenally well, up about 14% year to date. We're sitting in our balance model, and most of our models actually, with about 5 or 6% in gold, and it's just been solid. And then in Canada, we're outperforming the TSX, and the TSX is up about 7% year to date. Our Canadian equity is doing a few percent higher than that, thanks to the investments in the resource sector that we got into near the end of 2023. Companies like Meg Energy, which we just actually switched out of to Birchcliff, but Meg had a great run, and Birchcliff's already off to a great start. Suncor's had a great year. Topaz, Wheaton Precious Metals on the mining side, and Capstone Copper has just been phenomenal, up about over 30% this year, which is great to see. The U.S. we're keeping pace. Apple reported earnings last week, which were pretty good. Disney reported earnings this week, which were pretty bad. But overall in the U.S. we've been pretty neutral, but again, outperformance across the board when you look at sort of everything that we've been doing. Other than that, worth mentioning, as the markets sort of get into the summer lulls here, and because we've had sort of such a great start, we are still staying pretty defensive. I know that a lot of you talked to some team members this month about the auto-callable note that we did on the Canadian banks, which I think is a great sort of safer way to invest in the Canadian banks, which have been kind of lagging the last couple of years. But that note having some sort of extra protection while still having a lot of upside. So a lot of hope for that in the coming years. But yeah, just in general, just a quick update today. Things are going well. And if you have any questions, I'll be here, as long as it's not the weekend, because then I'll be at the beach. Anyway, take care, everyone. Have a